The most important part of trading in order to stay profitable is simply being able to manage your trade effectively. And like this, one of the most difficult thing. Like some of you are good at trading, you have good setups and everything, but then you lack the ability to actually manage your trade effectively. And that's what I'm actually going to break down to you in this video. In this video, I'm going to share with you 3 effective ways in which I personally manage my trade and has helped me get funded with multiple profit accounts. And this is something you also need to do if you want to stay profitable in the trading game. So with this already said, and if you're interested in this video, then you definitely like all my trading videos. So kindly help me do the YouTube business by smashing on that subscribe button, like this video, and also turn on the bell notification so you don't get to miss any of my upcoming videos. Now with this already said, let's get straight. Let me share with you these 3 effective ways in which you can actually use to manage your trade and stay at the favorable side, whether you are losing or winning. The first one on my list is basically trailing your stop loss. Now, what do I mean by trailing your stop loss? Trailing your stop loss is simply moving your stop loss in according to how your trade is actually moving into profit. Now, there's what we call break even in trading. This break even point is a point whereby when the market reverses against you, when it comes to that particular level, it automatically sends you out. So this could either mean that what you will take no profit or no loss from the trade, or you basically get some profit and no loss in the trade, even though the trade comes to hit your SL. So basically, when we talk about trailing your SL, it basically means that well, you tracking your trade whilst it is in profit, and this is a very important thing that has actually helped me pass a profit. And basically, when it comes to trading, the truth is that what not every single trade you take would hit your take profit point, and most of them you end up closing them yourself or basically letting them hit your break even point. And in order for you not to get out of the trade too fast to actually miss out on huge profit, that's where this trailing stop loss comes in. But then doing it wrong also could actually cost you a lot. That's why I'm going to take you straight on my chart right now and share exactly how I'm doing this with you. So because there's a principle you need to implement when it comes to trailing your stop loss to make sure that what you are always at the right, you are always doing it at the right time. Because when I got started with it at first, I was going too early or too late, which actually saw me into losing out a lot of profit that I wouldn't have lost that if I had done it the right way. Now with this said, let's get straight on my chart. Let me actually show this to you. Now right now, here is a trade I currently have running on GBP JPY. You can see it right here. Here's my entry, and then the trade is in a mini profit right now. Now what I basically do when it comes to trailing my stop loss is as simple as this. I look into my chart, and then for example, take a look at this market right now. Here is my entry point, and then here is my stop loss way down here. Now since this is my stop loss, what I'm going to do once this trade moves into a decent profit is that I'm going to drag my stop loss from this bottom and I set it here. However, I don't go too early in order not to lose on profit, because at the point the market is right now, you can still pull back. So basically what I do is that what I patiently wait for the market to give me a decent movement. So maybe let me say this market right now, I'm risking about $100 my stop loss, and they're targeting about $200 or more. Now in order to stay at the right part of the game, what I basically do is that what I wait for the trade to move at least $200 or $150 in profit. Yes, you heard me right. Like for example, my stop loss is $100, so I wait for this trade to move about $150 in profit. Then I'm going to drag my stop loss from my actual stop loss to my entry point. Now at that point, now if the market reverses against me, I will record no loss and no profit. This means that what there will be no loss, no profit, meaning I'm safe and nothing spoil. And then once the market moves from that my initial target of $150, which is it has moved from that $150 to about $200 or $250. Like let me say $200, which is what I will actually look at. Once you get to $200, then I will drag my stop loss from the break even point, which is the point where I'm not going to take any loss or any profit. I'll move it to about $70. Now, which basically means that I'm in $200 profit, but then I've already secured $70. So in case the market reverses against me, I'm going to get a profit of $70. Now, trailing my stop loss in this manner actually helped me record more profit than actually losses, because there are some trades whereby you take all of a sudden it will reverse against you. And the only way you can actually avoid this sort of unnecessary losses is basically trailing your stop loss and tracking the market whilst it moves. Like presently for this market right now, it's not at a point whereby I can track it right now because it's not too far away from my entry. So I'm not going to track it right now. For that reason, I'm still going to stay back and watch it actually move. Probably move up to this level here, probably give me a new break of structure at this level here. Then I'm going to see that okay, it's time I trail my stop loss. So far for now, it's too early to trail the stop loss. Now this is the first way in which you can actually use to manage your trade effectively and stay at a profitable side. Now let's move over to the second method on how you can actually manage your trade effectively. The second one on our list here when it comes to managing your trade effectively is simply monitor but don't micromanage. Now, what do I mean by monitor but not micromanage? Like when you take trade, the honest truth is that what? There's no way you are going to take a trade. For example, there's no way I'm going to take a trade and then you expect me not to look at my chart the whole period the trade is running. This is 100% impossible. And as a trader, like it's normal to actually look at your trade frequently. Most especially if you are getting started in the industry, it's very much okay that you check your trade every single minute, time to time, and a minute to minute. But the right way to actually do it is not checking it frequently, but actually checking it with some good pace. So for example, let me say I have a trade running right now. I actually look at my trade maybe 30 minutes. I always set a 30-minute timer because I'm trading on the 30-minute time frame. So I always judge my trade using the 30-minute time frame. So it's either I'm checking it every 30 minutes or I'm checking it every 1 hour to 4 hour period of time. It all totally boils down to the kind of trade I'm holding. Like for example, this trade on GBP JPY right now. I'm after this whole video shooting session, I'm just going out and I'm going to leave it. Why? Because the trade is moving in profit. No need for me to actually check it frequently. So as a trader out there as well, this is something I also want you to do. When you place a trade, it's very alright for you to check your trade frequently, but don't do it too frequently because looking at too frequently will tempt you to actually closing out too early or basically doing the wrong thing or leading you to take multiple positions. So one thing I'm going to advise to do is that once you place a trade, at least give your trade 1 hour to 40 minutes to 4 hour period of time before you come back to check it. Like our advice to do the 1 hour to 4 hour system, which is the one I use, and I think this one has helped me hold a lot of trade more better than before because at times when I go like that and I come back 4 hour time, the market is already at a place whereby I can set my first break even because 4 hour can actually give the market enough room to move from one section to another. So this one actually gives me the space to actually get decent spacing within my movement and tracking and every single thing. So the second thing you need to do here as a trader is simply check your trade whenever your trade is running, but then don't micromanage it. Don't check it too frequently. Maybe look at it every 4 hour period of time. Looking at it too frequently will drain you emotionally, and secondly, it will lead you to do what you wouldn't have done if you had given the trade enough room to move. So that's basically the second one on my system here. Simply don't micromanage your trades. The final thing on my list when it comes to managing your trade effectively is simply use a proper risk management approach. Like this is really important. Like even me here, despite how profitable I am, I'll tell you that I'm in a solid profit trade when it comes to trading. But then I'll still say using a proper risk management approach is one of the best things you can do for yourself. Like during the last week of December that just passed 2024, if not of my good risk management approach, I would have blown my 25k account. Like this, to be honest with you, like I had series of losses in a row from trade that I didn't even expect from. In fact, most of these trades were actually running in deep profit. But then within split seconds, everything changed. But what actually kept me afloat is simply because I never messed up with my risk management approach. And this is one thing I'll actually advise you to do as well. When you are trading, make sure you keep your risks between 1 to 2%. Like, in fact, keep it between 1 to 2%. Forget the 5%. Keep it within 1 to 2%. Keep it within this range, but then have a decent profit target whenever you are trading. This will actually help you a lot. Because if not for my risk management approach, as I already said, I would have blown my 25k prop firm account. But then due to my risk management approach, despite the series of losses I had in a row, I was still afloat. Why? Because my profits were way greater than my losses. Even though I had a series of losses, a single 1 or 2 profits would have been able to cover for every single thing. And it actually did. So one thing I advise to do when you are trading out there is simply keep your risks very low. When your risk is low, you worry less about your trade because you are not going to lose much. And secondly, your losses don't get into you, so they don't control you emotionally. And thirdly, it gives you the room to actually explore trading to the finance because you don't really focus much on the money. Now, these are 3 things I have for you when it comes to actually managing your trade effectively. Simply, 1, trail your stop loss. Secondly, monitor but do not micromanage your strategy or your trade. And thirdly, make sure that you are not over risking so that you don't get drained emotionally. So see you in my next video. In case you are looking for the best prop firm to use, I'm actually using Blueberry. Their link will be down in the video description. And also, you can check my other trading videos to actually help you grow as a fellow trader. So have a lovely day. Bye.